Hey there, it's Samantha Chan from Elevate Realty, and today we're tackling one of the biggest questions for new real estate investors. Should you focus on cash flow or appreciation? Now, this debate isn't just amongst new investors. Even within our team, there is no one-size-fits-all answer. Why? Well, because everyone's at a different stage in life with unique investment goals. So today, let's break it down and explore when to prioritize each and how returns may vary between the two. If you're new here, we're all about helping you make smarter real estate investing decisions in Toronto. Don't forget to like and subscribe if you enjoy our content. Now, let's dive in. Imagine you're fresh in your career, eyeing your first real estate purchase. You're willing to take a lot of risk and put in a lot of effort, but your income isn't high enough yet. And this is where cash flow can take the spotlight. What happens when you choose a property with higher rental income and higher rent yields? That extra income will add to your own salary income to qualify you for bigger mortgages. It's not only crucial for qualifying for larger mortgages, but also sets the foundation for you for future success. Now, as you progress and your income continues to grow, your investment goals might evolve. And if you're looking for steady income stream for retirement, then cash flow would be your best friend. Or perhaps you're aiming to scale up and build a real estate empire. If that's you, then you might want to consider taking on bigger projects instead. Think of buying rundown properties at a discount, renovating it, and then adding more units to it. And this strategy can substantially boost your property values more quickly so that you can go back to the bank and pull out your initial capital to do it all over again. The caveat here is that you will want to have at least decent cash flows so that your property on refinancing can still support itself with at least break-even cash flows. And the reason here is twofold. One, you won't have to stress too much about keeping your investment afloat. And two, having at least break-even cash flows can help you to continue to qualify for future mortgages moving forward, which is very important if you're looking to scale quickly. Next, let's break down the income taxes part. When you aim to maximize your real estate investing returns, you'll also want to minimize your tax bill. Now, 100% of rental income and cash flows will get taxed, whereas appreciation, only half of it gets taxed. So if you end up making the same amount from both, going with appreciation actually gives you a better net return after tax. Another thing to keep in mind by going the appreciation route is that in order to access your cash, you don't have to sell and pay capital gains tax and transaction fees. There's actually another option. You can go back to the bank to refinance and pull out a similar amount, deferring tax obligations, which is another big benefit when you focus on appreciation. But finally, perhaps the most important part, in our opinion, is to learn how to find the best returns. And the key concept I want you to understand is that doubling your cash flows isn't the same as doubling your appreciation. Just take a look at the simple example. Imagine we have two properties, both worth $1 million. Property A sees a 3% increase in value annually, while property B sees a 6% appreciation each year. That's a $30,000 difference, and after taxes, let's say you get taxed at 30%, property B brings in $25,500 more in appreciation each year. However, property A, with its double cash flows of $1,000 per month compared to $500 for property B, that translates to $6,000 more in property A annually before taxes, or $42,000 after tax. So it's clear that property B is the better choice. What you need to actually see is $3,500 in monthly cash flows in property A just to break even with property B, which is like the unicorn deal. So in short, while strong cash flows can help you get your foot in the door, experienced real estate investors often shift their focus to appreciation because of this fact. And that's where Toronto really shines. Toronto has a proven track record of outperforming other Canadian cities in terms of long-term appreciation, which means better total returns and better tax benefits. Plus, the market in Toronto is pretty stable, so when it comes time to sell, you'll be at a lower risk of bigger losses during a market downturn. Now, if you're aiming to maximize real estate investing returns, just like any savvy real estate investor should, and want the best of both worlds in terms of appreciation and cash flow potential, then Toronto's new housing policies focusing on the missing middle are definitely worth checking out. These new policies in the past year or two now allow you to turn one house into 4 units plus a backyard house and possibly up to 30 units sometime this year later on. What you get in Toronto is more stable appreciation according to our history, great cash flows because you have the potential to add in more units, and better value add potential when you take on projects like doing a complete makeover or adding extra units, because higher rents will translate to higher values from an investment property standpoint. Now, no matter if you're focused on cash flow or appreciation, we think it's important for you to understand your investment and do the math properly. And if you're diving into Toronto real estate and need expert advice, we're here for you at Elevate Realty. We're not your typical real estate sales brokerage. Instead, we focus on using numbers to make better real estate investing decisions in Toronto. And that can mean looking for stronger investments with positive cash flow, thinking about risk management, and looking for ways to boost returns like value add renovations and gentrifying areas. If you do want to discuss your private real estate situation with us, just head over to this link here to set up a time to chat. You can also check out more content on our website or find us on social media. And if you haven't done so already, please like, subscribe, and share this video if you think someone else might like it too. Thanks so much for watching, and I'll see you in the next video. Bye.